The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians on this 27th day of November, almost wrapping up. Oh man, by this time next week we will be starting December's candle for the monthly charts. I'm just showing you here the E-mini made peak Ds and Es just in the 2-minute and 5-minute and 10-minute chart at the 26.78s. Pulls back to the 26.69s, had a pretty good run from the low today of about 26.55-ish, and you know, coming off the low was good. So let's just go through all the stuff that we're looking at. And of course, as you heard from Tommy Jr. just a short while ago, I am doing a week from tonight. I'll be doing a webinar, 5 o'clock Eastern time, 5 to 6:30, a webinar on what's next. I mean, what's next? Where are we? What are we looking at? And how are we going to get, for subscribers, how are we going to start implementing buys on certain stocks that are absolutely fantastic stocks? They've taken a bit of a beating. When will they make lows? We'll try to find out where the best possibilities are. And from my daily newsletter, you will see that very often as we're doing this, we start to enter positions. We're looking at the Dow. Let me just go to the Dow right now. I've got the diamonds, but I want to the Dow. The Dow is down 38 to 24,602. We were long from yesterday at a really nice gain. And I just decided that because of you remember yesterday I said, the question was why, especially with the 3 times long, why would you have a fairly tight stop? One of the reasons is that my timing is usually very good, and that if I do get into these things, that should be the low or the high or whatever it is. Remember that we got the exact high on the Dow the day after the all-time high for the short position. But the point is that because we've got one-offs. So Brexit is a big deal. So for a day, it's up, the market's down, the pound tries to rally, it fails, dollar comes. And then all of a sudden, Tuesday morning, we're looking at the market pulling back pretty sharply just as it's down. Look at these candles. Huge red candle, then you get a big green candle, all of a sudden back to the red candles. And what I said to subscribers is, I want to keep the stop fairly tight. I don't want to see a winning position turn into a losing position. So we got just a fractional gain on a break-even trade in a couple of our positions. We still have a particular long position. It is frustrating when you're coming off what should be a pretty decent safety net to go long and then get taken out and then say, wow, now I'm going to go back in just a little higher. And now my risk reward is difficult. So what I like to do is to say the entrance is the entrance. I don't mind small little losses. When we get the long sweep to the upside or the downside, that's great. But I definitely don't want to have to try to make up a whole bunch of points. I don't like doing that. So we got stopped out of our Dow long position. We got stopped out of our QQQ long position. I don't know what to say. Yes, it's upsetting, but what if the 200-point Dow decline early this morning, suddenly there was another case of bad news. That case of bad news could really have tippled the market to go down to test the 24,122 level. It's not difficult to do that these days. So, and the same thing with the Qs. Just you needed one extra shoe to drop, and then where do you put the stop? What do you do? You know, that's okay. We'll deal with it. It's upsetting, but I'll deal with it. And I just wasn't prepared to have a gain turn into a loss. And it would have been, I could have lowered the stop to what it was yesterday. That would have been good. And it actually would have held and we would have been up somewhat. I don't know what to say. This is the way I try to deal with it. when you've got subscribers. One thing you personally, I have subscribers who've done things. They've looked at the analysis and then they've made decisions, and they've held or they've added or they've done other things, but they use the analysis saying, in this particular case, it looks like the bias is more to the upside. In this particular case, it's more to the downside. And that's how we do it. So just wanted to explain what I'm looking at from opening call subscribers. We do have one position that's still long and doing quite nicely. So here we go. The Dow is down 30 at 24,610. If there is a chance that the market, by what I'd said, by 1:30 this afternoon, if the Dow is up about 15 points going to 130, and then all of a sudden from 130 it goes to plus 30, that says you could have a pretty nice close, and then you could take out the high of yesterday of 24,673, I think it was. Yeah, 24,673. That'll start an extension leg to the upside. And you know what? If it does that, then we might have even more to the upside going into the next couple of days. So that's how I'm going to deal with it. Any sudden decline. Now, we've had most of the selling pressure. All day, the selling pressure has been met with buying pressure. So if this selling pressure suddenly reverses and holds into 3 o'clock, Dow's down 45 or 50 points, S&P is down about 3 or 4, then you could see a pretty weak close. All right, got that out the way. S&P, SPX.X, there we go, up 42 cents at 26.73. Up 0.01%, Dow's 0.13% down, so the S&P is acting quite nicely here. This has extended leg A. Just about to hit again the 9-period moving average, the pink line. If it takes that out, if it goes above 26, is that an A? Yeah. If it goes into the 26.90 level, then expect that the 26.94, no, it can't be 90, it's the 26.83 level. Then expect that the 26.94 will be hit sometime this week. But look at this weekly chart. This weekly chart has got the H pattern, just like the daily. The daily is finding a little bit of support. Any failure here is going to be very negative. So this for the weekly chart, this is absolutely key. You want to see Friday, you want to see a close above 2,700, kind of save the day in the weekly chart, at least in the short term, because any close below 2,650 will be pretty poor action in the weekly, and that'll impact the monthly as you go into Monday's candle, last day of the month. We're going to be watching this very closely. So support is 26.57. Let's go to the QQQ, 1, 2, 3. Actually up 0.32%, up 52 cents at 163.43. That's a shame because we were in real nicely. And the MACD is trying to rally, hasn't closed positive. Stochastic's helping a little bit, is at 19%. If we can get to the 21%, 22% level, that'll be a good sign. Weekly chart just looks terrible. So does the monthly. A lot has to happen between today and Monday's close at 4 p.m. November's candle wraps it up. Ooh, look at these November candles for the monthly charts. IWM right now. So the QQQ's above 163.70. 164.69 is then the 14-period exponential moving average resistance. The IWM is 149.25, down 56 cents. In between, oh no, it's stuck. It hasn't been able to cross over the pink line, the 9-period moving average into the 149.50s. Then 150.16 is the 14-period resistance. It better hold 148.75. Otherwise, it's got a real problem. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's down 30, S&P's up.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman, Tiger Technicians out. Let me just see if I can find this. And the front page is right here. So we'll go, okay. So if you go to the front page of TFNN, you'll see my webinar coming up a week from tonight, a week from at 5 o'clock Eastern time. And really, I think that in terms of timing, usually I like to get things done. I look ahead and I say, in terms of timing, where would I like a webinar to be? Because there's going to be a potential change in trend. This is not necessarily a particular date because there's a change in trend that's coming Tuesday. What it is that there has been such a significant, I mean, just look at this, the IWM, since the August high of 173.39, it's been down to 145. It's trading right now at 149. That, you know, when you start to get over 12%, 14% in these indexes on the downside in such a quick move, it takes a while to reconfigure for fund managers to say, whoa, that was really quick. Now what do I do? Because most of them couldn't have got out until halfway through. So they already down, they were down 8%, maybe 10%. And then the rest that they've got is down again. And now they're deciding, is this an opportunity to rebuy, or is it an opportunity to not showing in the den? So wait, is my camera not showing? It should be showing. Can you see my charts? So there's the question. Yeah, okay. So that's a big deal. Look, let me just show you something. Look, the QQQs have been going down since October at 187. They make a low of 157, so that's 30 points. Now, 18 points is your 10%. So we're up in the 17 to 18% area, and that monthly chart is just not looking good. And when you look at an Amazon at this particular point, this is exactly where I'd be saying, oh man, you want to be buying Amazon because it should have, regardless of whether it's one of their best years or not, they're still going to have a heck of a year. Because they the main meeting. But now you're looking at Target, Walmart, Macy's, a whole bunch of them have said that our internet action is way better than it was. So I'm saying to myself, I think there's time. I think with a monthly chart like this, that Amazon, one of the very best, it still can give you time in which to enter. Even if you miss the low, you'll be able to get a low that should give you a real nice opportunity to make money. But my thinking is you're going to have patience to wait. You can't have a spectacular move like this for a couple of years, just straight up, no real consolidation. Then all of a sudden, when there is a consolidation, it is a monster consolidation, and then it's all over, and then you start on the way up. I just don't think that is. And then I just wanted to emphasize that the trades that we put on yesterday were short-term trades. That's why if I felt that there was the low, we've made the internal low, and now I'm expecting that this was the residual low. So this is really the next big buying opportunity. I would have put in way bigger stops. I would have then gone for the 10 or 11%, just as we did March of 2009 when we picked the exact low in the market after that major crash. And we got in at 65.56 or something. I think that's what it was in the diamonds, and held it for about 18 months. I had a 3.5 point stop. I never do that. And that was big. 3 points on a $6 stock for us in a major key index. That was quite a lot. So now what I'm looking at is within the context of Amazon, nice bounce. At this point, it could even go a little higher because remember the lowercase h, when it takes out the left side low, if it then gives a buy signal, it hasn't yet done that, it's giving a nice signal for a bit of a rally. Then you've got to think of it as rallying because it went from 1476.36 in Amazon down to 1420 round number low. Let me just put that in so I don't have to keep looking at it every day. 1420, and I'll even put R in a low just to say at least to this point it's a low. You can get a larger arch formation, but 1651 is the 200 period exponential moving average key resistance, and we'll see if it's able to get there. Yeah, there could be news, any news. So here we go. So gold is down 10 points. Just look at that. And as I've said before, I just don't think gold is going to break to the upside. I think it's stuck in a range. And look, here's another second arch formation. Lowercase h goes to another lowercase h, like an M formation right here. And so down, gold is at 12.11. Silver is also down, I guess, down 0.95% at 14.07. Now that's not a good pattern at all. And that weekly, that lowercase h is just being tested once more. And that should have been a positive Chapman wave Roman candle, little mini candle right there. But if you see silver trading for any day, there's a close below below 14, expect as the low, the most recent low of 13.86 is going to be tested. And I had a lot of questions about gold. When is gold really going to get going? Well, let me show you something why I think gold is stuck. Look at the dollar. Look at that candle. And I said the other day that in fact, I'm getting rid of this now because I said to subscribers, I just don't see any reason now to be thinking alternate count. That is a peak C. It should go to a leg D above 97.69 any moment, at any moment. So that is out, just getting rid of these notations. You had a wonderful Chapman wave stalk leg formation. There's the leg, there's the body, there's the neck, there's the beak. And remember, after the beak, I always say there's a very strong rally, and then you're on your own. Now, I need to point out, at some point I'm going to do a webinar fairly soon where I discuss things like this flat MACD with the left side arch going to the right side arch, or within a narrow range. It's been able to give support to the dollar, and the MACD is at 79.60. It hasn't got to 80% yet, but look at the way the dollar's been walking the green line, the 9-period moving average, and there's the 14-period moving average. So 96.45 is the 9-period, and 96.07 is the 14-period. Dollar is acting very well, and let's look at the euro because it's obviously in counterpoint. Euro must be making an arch formation. There it is. Another arch formation at 1.127. Watch out, because if it accelerates under 1.125, the low of 1.12165 of the 13th of November will become really important as either support that holds or it breaks under it. If you look at the USD JPY, it was rallying yesterday. Is it rallying today? Oh, nice move up. Yes, the yen is moving beautifully. This is a USD JPY currency pair moving very well within the rectangle. Remember, I made it a smaller rectangle. Now I'm going to raise it to the high that was made right there on the week of the 5th of October of 114.58. It's at 113.817. Nice action. Dow's down 76, S&P's down 4. I'll be right back. That's why we make tight stops. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we are back. And yeah, there might be a little problem. Maybe I can see now that the camera is not quite working for me, but it's working for my charts. And hey, better the charts, you know, than the face, you don't. So we're looking at the TLT, and this is going to be really important because the TLT right now is up 5 cents. It made a peak D in the daily chart. This is the Lehman 20-year T-bond fund. And the MACD is still good. The stochastic is still good at 81.57. I'm looking at this and saying the money has not, from the information I'm getting, money has not yet begun to flow out of bonds out of stocks into bonds. It might have trickled, but I don't see it flowing. In other words, I would be looking at 100, and I'd say if it goes to 115.20s, probably that's where you'll start to see it. Well, we did. We went to 115.50. 115.76, and then haven't held it, but we're at 141.95. So I'm not sure what it's going to take, because I think, and this is my assessment weeks and weeks ago, that my assessment is that the bond market still thinks that the Fed has higher yields in play. And as a result, no one wants to be too early to get into bonds if the bonds are going to start to go down. Yeah, nobody's wanting to go into bonds just yet because there's just too much uncertainty. So within the context of my theory that it had not my theory, it's just fact that for decades actually, look at the 30-year decline in yields from the early 1980s, and look at the stock market. So yes, there is a relationship where cheaper money can go into other things like stocks. So now that it's more expensive money, there's a kind of a hesitancy there's this sense of, we're not sure. We've got things might be coming to a head very soon with the Mueller investigation. You can call it an investigation. I don't know what the heck you want to call it, but it's just a really weird thing. You can say that Brexit, another weird thing. I mean, let's face it, the people voted. They might have made a terrible mistake, or they might have made the greatest thing, but they did vote, and basically not much has been done. And now you're starting to see that there are compromises on compromises. A 7-page document becomes a 27-page document. A 27-page document becomes a 56. I mean, it multiplies almost like a Fibonacci ratio. And so nothing's certain yet. That's the reason Dow's down 115, S&P's down 9. And that's the reason why I said this was a trade. And therefore, I understand the thinking that if you're even going to go to a triple of anything, surely you need to give wider parameters. If I had the confidence, this was just a trade, I wanted to maximize as much money as possible for traders, short-term traders, and that was a way of doing it. I didn't want to maximize the most amount of money on the downside, so that's the only reason, and the thinking is absolutely correct. Yes, if you're going to go for triples, surely you want a wider parameter, and my answer is that a lot of the time I give pretty good specs, and if they measure up to my expectations, everything works out just fine. When there's the sense that it is speed that you're dealing with, then you've got to ameliorate some of that downside action or negative action by being tight, and you can always get back in. I remember years and years ago, I remember Tom O'Brien used to say, there's always another trade. And I always just think, yeah, I mean, come on, of course there's always another trade. But you want to know what? I mean, nothing could be truer than that. There is always another trade. So, yeah, I just wanted to clarify that. Okay, TLT, we've done that. Parameters are, now I'm going to say to you, if there is a move into the 116.50s, in the TLT, it's another, say, 2 points, 1.5, 1.75 points higher. That holds for 2 out of 3 sessions. As the market starts to go, the Dow goes to the 24,300s, the S&P goes to the 20. Let me just check that out. It's the 2680s right now, 2657s. Yeah. Then I think we're going to start to see it, and then it's going to kick in, a lot more seriously. Now, let's just go to the next thing, which is crude oil. Crude oil. Now, I had a couple of questions the other day. Remember, I showed you this right here. This is with the automated Chapman wave support and resistance levels. Crude oil. There it comes. Hello, anybody home? Now, why is it doing that? Oh, there it is, at CL. Yes, you remember the 52.59, and it went and it held and it rallied, but that was a support level. And the question was, I said, yeah, if you're going to be buying crude oil or USO, you've got to have a tight stop just underneath the low. In this case, the low of 52, I think it was 52.77. And the automated Chapman wave projection was 52.59 support. Now it is short-term resistance. So that's the reason why when you're in a look at this candle. Do you realize that crude oil, some of you do, but some of you don't, crude oil has had 1, 2, 3, 4, 5, 6, 7, 8 consecutive weekly sessions with lower lows from the high that was made at 77.04 the week of the 5th of October. And even this week made a lower low. But now it's trying to form some kind of support level because it's just not backing down. It's kind of holding there. And even with the dollar up like this, being down just 99 cents is saying, hey, struggling, but at least it's trying to hold some kind of support. I don't see support anywhere, maybe in the 10-minute chart. Nope, I don't see any support lines until you get to 45. All right, that's just way down. But I just don't see it. It could find support. I just don't have it as a projection in the Chapman wave. All right. Now what I want you to do is to go to the VIX index. Got a bunch of questions. We're going to get to them right away. The VIX index, VIX.X, is trading up 23 cents at 19.13. Now, here's my issue. The Dow is down 87. The S&P is down about 6. Not a big deal. The NASDAQ actually is in, let me see, the QQQs. QQQs are down a little bit. So the VIX index is saying, we don't believe this pullback right now. We think that there's going to be some kind of support level through the rest of the day, but we're running a little bit to show some kind of empathy with the markets. But let me tell you, if at any point by 3:20, between 3:10 this afternoon Eastern Time and 3:35, if the VIX is either below 18.90 and the market has come back with the Dow's up 20 and the S&P is up about 3, that'll be a real nice action to say we're trying to form some kind of a base. But if the VIX goes to 19.65 or higher and the market actually has taken another deep dive, not going to be good for the close. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So let's just go through the XAL. Yeah, we got XAL. Where is the airline index? Down yesterday. Down. Closed off the highs yesterday. Now going to a leg D, just under 105.76, 200-period moving average in the daily. Hey, this is very nice action on the daily. Look at the weekly, and all of a sudden you say, oh, wait a minute. A new series of lows? EFG, maybe a G, maybe a G/B. Gee, on the downside, the monthly chart, not good at all. What do I say? I say let's just watch this because it has shown pretty good resiliency since it made its low in October at about 93. It's traded up to the 105.25 area, trading at 103.59 right now. It's at least attempting to do something. If you look at the IYT, which is the transports, the truckers, the shippers, got the rails, and of course you got airlines. Not good. It's just stuck in a range. I drew this rectangle formation. Remember a little while saying, hey, there is a chance for an inverted head and shoulders, but I think that the technicals and the weekly are so poor that I just can't see it succeeding yet. And this is with oil coming down so sharply. This is a peak F in the monthly chart. I don't see, it's an F. I don't know what else to call it. 209.44 was the high. It goes down to 176 and now 174, and now it's 175, and now it's trading at 188. So far, not very good in the IYT. Boeing, yep, the usual question about Boeing. Boeing is down 91 cents at 315.45. It's just stuck in the lower range. I just don't see anything for Boeing at this particular time. Question about Goldman Sachs down. What was it? Goldman Sachs is down 0.2. JP Morgan up 0.2. ASP, V. Yep. Well, look at those. Look, Goldman Sachs is attempting to come off the bottom, but the stochastic at 5% is really weak, and the monthly chart, the weekly chart and monthly charts are terrible. And what was it? MS. And there's Morgan Stanley. Morgan Stanley is trading at 44. 200-period moving average of 42.20 was almost hit last week. I think it's going to be hit before it really has a chance to do much more on the upside. PPA, which is, of course, where Raytheon, Boeing, Raytheon, Lockheed, etc., down 1 at 53.69. Peak F, major top in 1st of October. Was it the 1st of October? Yep, week of October the 5th at 62. plummets down to 52. Now it's trading at 53.69. Oh man, I look at this and I say aerospace and defense, you don't look good at all. Next question is AXP. AXP had a fantastic rally. Then it gave back a chunk, and then it made a V-shaped formation. It's holding quite nicely in the upper range at 109.22, down 47 cents today. Hasn't quite gone to leg C yet. This is a double top potential, gray peak B. I'm watching it. Yes, it is good, but what else went with it? AXP. This is Visa. Visa is not acting well. It's down 0.60, 135. American Express is way stronger than Visa at this particular point. How's MA, MasterCard? Because they're all not exactly the same, but they're going to the cards. Not good at all. Yes, coming off a bounce to minus 23 at 191.62. No, I think MasterCard also needs time. XLI, let's go to XLI. We've got that. Oh, you remember I said I don't like the XLI. I heard a guy, where was it? I heard a guy talking about the industrials and saying, yep, the industrials are ready, and I'm looking at the chart, and I said, no, the Dow is a different chart formation to the XLI, and it is a better chart formation, but it is not looking good at all, and neither is the XLI, which is the S&P Select Industrial Spider Fund, just in the middle of a range until it can trade from 69.63 right now and hold a whole week above 74. And that's going to take a while to get there. Or if it retests, if it slides into 69, let's just say 68.93, closes under there, watch out. You got yourself a dreaded H. 66.99 will be the target. Next question is AKS. Wow, we haven't had that for ages. We haven't looked at it. I just know no part of it. AKS is AKS Steel, 3.03 down, 24 cents down, over 7%. No, don't even think about it. Look at this. The arch formation took out the lows, and that means the SLX, which has been the steels, they are just saying it's going to have to be a spectacular benefit that China gives us if there is ever a deal, because this is a horrible chart of the S&P, the Van Eck Vector Steel ETF. Even a really good rebound says from 38.65 down $1.13 right now, it would have to get to the 42.50s. That's over 4 points and hold there for the weekly to even show any sign of resiliency. Not good at all. X, same thing. X is also, it's even worse. Oh, the monthly chart is even worse on X US Steel. Makes an all-time high. Was it an all-time high? Well, it makes a high in the 46s back in February or March, I think it was. And then what happens? Plummets down to the 22.84 level. Cut in half. Unbelievable. Cut in half. XRT. I'd love to look at the XRT today. XRT is down 11 cents, holding quite nicely after a rebound from the lows in the 43 area. 52.96 was the high in August. 43s was the low just 5 sessions ago. Coming off the 200-period moving average. I think it's going to have to retest the moving average of 44.04. XRT. Spider, S&P Retail. Not good. Questions. I think we've covered a huge chunk of questions. Walmart. All right, let's go to Walmart. Walmart is trading down 6 cents. Oh, man. Made that big cup formation peak D back in, I think it was March, around about 109. Drops to the 81 area, 82 area. Rallies up to 105. Slides to 93, and now it's trading at 95. No, I don't see anything yet for Walmart. You know, we're running out of time. Today was a really important day. Going into Thursday, if the Dow isn't able to get to the 25,870s, yeah, I don't know what to say. That's just not going to be good for the monthly chart. And the S&P, same thing. It just needs at least another 20 to 30 points. Really, 2,700. The S&P really needs to get to 2,700 to show some veracity, some real strength. Merck was helping the Dow for a long time, and then it just failed completely back in early 2007 into around about April or May of this year, as it went from the 66s down to the 54s, and now it's trading at 75.88. And that's really, in the webinar that I'm going to do on a week from Tuesday, I'm going to discuss what do we do with the stocks that have been absolutely stupendous? What would really hurt them? Are they buys on the next pullback, or is this it? They are done. Well, looking at the monthly chart of Merck, I think there's something there, something special. Big pharma. I'll be back. Dow's down 77.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. Basil Chapman. We're still here for the very last segment before we go to Steve, then we go to Dave, and then we go to Tom. I'll be back with Tom a little later on. Let's go to Dan in Alpharetta, Georgia. Hi, Dan. How are you?
Basil, doing well. How are you?
Very well, thank you. You'd like to look at?
SMH. It's really the same pattern, I guess, as the IWM. Both of them look like you're in what I think is the dreaded H, but wanted to chat with you on those.
Okay. So do you have a position at all, or are you just looking at this?
No, no positions right now.
Okay. So I also have no positions because it's in the middle of a range. I would like it to rally. It's at 92.81. Everything I'm hearing about, and I heard again firsthand today about the semiconductor business, just not good at all. Just not good. I wish I was in on a conversation that someone heard the other day, right from one of the leading semiconductor companies, the CEO. But I wasn't there. But it must have been a very interesting conversation. I'm looking at this and I'm saying, for this particular phase right now, and that phase has been going since the end of October, from 86.95 to the 98.13 high, from the low to the high, this is a trading band. My suspicion is that the semiconductors are going to be in this band for just a little longer. I would like to see the 92.85. I'd like to see a rally into the 94.80s, 95.60s, maybe even a little higher to make the M pattern. And then I think we get another leg down to test the 86.95 low. So where are we right now? It would be great to say you could step in with a short position on the semis here, add another one a point and a half higher, and another one a point and a half higher. I just don't think I want to do that right now. I can see enough wiggling and wiggling that there's a chance there should be a rally. If there's a sudden slide below 91.70, that might have been the rally, and now it's going to go lower. It's real tough at this particular point if you don't have a position to suddenly start a position, because the bounces can be quite sharp. I'm going to look at it again tomorrow, Dan, so we'll do it together. I'll be talking about the SMH, I'll be talking about GM, some others that I got emails about just a moment ago. I don't have a position, and I'm going to just wait to have patience to reshort. Hope that helps you.
Thank you.
Thank you. I'll be back tomorrow, folks. I'll be back with them a little later on. Don't forget, go to the front page of TFNN. Webinar coming up a week from tonight.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.